Imagine this, the White House. Not a war room, not a crisis room. A boardroom. Around the table sit the most powerful oil executives on earth. Chevron, ExxonMobil, ConocoPhillips, and across from them, the President of the United States. He makes a promise: total safety, total security, not to voters, not to citizens, to oil companies. This is the moment Venezuela's future quietly changes hands. $100 billion, the largest oil reserves on the planet, a toppled president, and a message that is unmistakably clear. America is open for extraction. I'm Fareed Zakaria, and today I want to tell you why this is not just an oil story. It's a power story, a history story, a warning story. Because when a superpower promises protection to capital, nations rarely stay the same. If you want analysis beyond headlines, stay with me. Because before we ask what America gains, we need to ask a deeper question. What is Venezuela actually being rebuilt into? And that takes us straight to the core of this moment. Look past the spectacle. Strip away the cameras, the handshakes, the confident promises. What is actually being proposed here? A simple equation: regime change, legal protection, private capital, rapid extraction. The White House is telling oil companies this: Venezuela is open again, not slowly, not cautiously, immediately. The government will not rebuild the country. The companies will, with their own money, under American protection. This is the core of Trump's message. No taxpayer funding, no humanitarian framing, just security for investment. In return, the United States gets leverage, lower oil prices, control over supply, and influence over a country that holds the world's largest crude reserves. But there is tension beneath the surface. Executives nod, yet they hesitate. They speak of legal uncertainty, of past nationalization, of billions still unpaid. One side sees opportunity, the other sees risk, and between them sits Venezuela, a nation reduced to a bargaining chip. To understand how it reached this point, we have to go back to the moment when oil became the state, and the state became oil. That story begins decades earlier. To understand Venezuela, you have to understand oil. Because oil was never just a resource. It became the state. In the late 1990 seconds, Venezuela was riding an oil boom. Production was high, revenue was flowing, the future looked secure. Then came a political choice. The government reasserted control. Foreign assets were nationalized, private capital retreated. At first, the system held. Oil money funded the state. The state funded society, and dependence quietly deepened. But oil is unforgiving. Infrastructure ages. Fields decline. Investment stops. By the mid-2000s, the cycle had turned. What once powered growth now masked decay. Production fell. Expertise left. Maintenance slowed. Over time, oil stopped being a stabilizer. It became a trap. When prices fell, there was no cushion. When investment dried up, there was no replacement. When politics hardened, the system froze. This is how Venezuela entered decline. Not overnight, but structurally, a country with the world's largest reserves, unable to extract them. And when a nation's economy collapses around a single resource, power does not disappear. It gets redistributed. That redistribution set the stage for crisis. And the first shock would change everything. The first shock came quietly. No explosion, no single headline, just collapse. Production fell off a cliff. Facilities rusted. Skilled workers left. Venezuela's oil industry, once among the world's most sophisticated, began to fail in real time. Then came the rupture. The government lost revenue, the state lost capacity, and legitimacy began to erode. For foreign companies, the message was clear. This was no longer a commercial risk. It was a systemic one. ExxonMobil left, ConocoPhillips left. Billions were frozen in unresolved claims. What followed was not just economic decline, it was isolation. Investment vanished, infrastructure aged faster, and the country's core asset became unusable. This is the paradox. Venezuela had more oil than anyone else, yet it could not turn oil into power, and that vacuum did not stay empty. Because when production collapses in a resource state, politics hardens, control replaces competence, loyalty replaces expertise, survival replaces reform. This was the first crisis, not a coup, not an invasion, but a slow-motion implosion, and it created the conditions for something larger. Because once oil fails, everything else follows. What matters most is not the promise, it's the mechanism behind it. Trump's offer of total safety is not rhetorical. It is structural, legal protection, executive orders, control over revenue streams. Oil money is placed beyond the reach of courts, beyond creditors, held in U.S. Treasury accounts. In theory, it is stabilization. In practice, it is leverage. The United States is not rebuilding Venezuela directly. It is redesigning the rules. Who can extract, who can profit, who gets paid first. Past losses are dismissed, claims are frozen. The slate is declared clean. This is the hidden bargain. Companies bring capital. The US provides security, and Venezuela provides the resource. Sovereignty becomes conditional, not through occupation, but through contracts, protections, and guarantees. This system moves fast, faster than courts, faster than institutions, faster than politics can react. And that speed is the point, because once extraction resumes at scale, the new order becomes irreversible. This is not chaos. It is design, and when systems are redesigned under pressure, they produce consequences no one fully controls. Those consequences surface in the next shock, and it arrives sooner than anyone expects. The second shock is not in Venezuela. It's in the market. Trump promises speed. 18 months, production surging, oil flooding back, but the world is already drowning in supply. Global oil is in surplus. Gas prices are falling, margins are thin, so when Venezuela re-enters, it doesn't stabilize the system. It distorts it. More barrels push prices down. Profits shrink. Risk tolerance collapses. Executives know this. That is why they hesitate. That is why they demand legal change first. That is why they call Venezuela uninvestable. Because cheap oil changes behavior. Projects are delayed. Capital becomes cautious. Political promises meet market reality. And suddenly, the leverage shifts again. If prices fall too far, Venezuela is no longer a prize. It becomes a burden. Infrastructure needs billions. Returns look uncertain. Stability becomes conditional. This is the second crisis. Not political, economic. A collision between ambition and arithmetic, between power and price. And when that collision happens, it is not executives who feel it first. It is ordinary people, which brings us to the human cost. Now, I want you to think about yourself, not as an analyst, not as an investor, as a citizen. When oil prices move, when contracts shift, when governments negotiate behind closed doors, it doesn't feel abstract. You feel it at the pump, in your bills, in your job security. For Venezuelans, the stakes are existential. Rebuilding sounds hopeful, but rebuilding for extraction is not the same as rebuilding for people. Jobs come back slowly. Services take years. Institutions take decades. And when foreign capital is protected first, citizens wait last. This is the quiet cost of speed. Promises of stability create expectations. When they fall short, frustration hardens. You have seen this pattern before. Hope, disappointment, anger. And here is the uncomfortable truth. You cannot separate oil policy from daily life. Energy shapes inflation. Inflation shapes politics. Politics shapes your future. If this system fails, it won't fail on television. It will fail in kitchens, in neighborhoods, in ordinary lives. If you believe analysis should center people, not just power, stay with me, because this story doesn't stop at Venezuela. It ripples outward. What happens in Venezuela does not stay in Venezuela. Oil is global, so are its consequences. When a major reserve re-enters the market, supply chains shift, alliances adjust, prices ripple outward. The United States gains leverage, not just economically. Geopolitically, control over Venezuelan oil reshapes energy flows in the Americas. It weakens alternative suppliers, it pressures rivals, it signals power, but it also sends a message. Intervention works. If you control security, you can control resources. Other states notice, so do other powers. History tells us this rarely ends cleanly. Foreign intervention can raise output, but it also creates instability. Booms followed by reversals, investment followed by withdrawal. The global system absorbs the shock, then magnifies it. A surplus today becomes a shortage tomorrow. Certainty becomes volatility, and volatility is the enemy of planning. This is why Venezuela matters beyond its borders. It becomes a test case for markets, for sovereignty, for the future of energy politics. And how that test resolves will shape what comes next. Which brings us to the question everyone is avoiding. What happens from here? There are three paths forward. None of them are clean. The first is the optimistic path. Legal reforms move quickly. Contracts hold. Investment flows. Oil production rises steadily. Revenue returns. The system stabilizes. Venezuela becomes functional again. Not transformed, but operational. The second path is more likely. Change comes unevenly. Rules shift. Confidence remains fragile. Some money arrives. Some projects move, but progress is slow. Oil helps. It does not heal. The country improves at the margins, while structural weaknesses remain. Then there is the third path, the dangerous one. Prices fall. Returns disappoint. Political pressure grows. Investment pauses. Security guarantees weaken. Trust collapses again. Venezuela relapses. Not because it lacks oil, but because systems built for speed break under stress. This is the lesson of resource politics. Natural wealth does not create stability. Institutions do. Without them, every boom plants the seeds of the next bust. Which brings us to the final insight. Because this story is not really about Venezuela, it is about how power thinks it can engineer outcomes. And what happens when it tries. This is the illusion at the center of the story. That power can shortcut history. That capital plus security equals stability. That extraction can substitute for institutions. It cannot. Venezuela's oil has always been immense. Its tragedy was never geological. It was systemic. Trump's promise of total safety reveals something deeper. Not confidence, but impatience. A belief that control is faster than consensus. That protection is easier than legitimacy. Sometimes it works, briefly, but systems built this way demand constant force, constant guarantees, constant intervention. And the moment attention shifts, they unravel. For Venezuela, the future will not be decided in boardrooms or executive orders or press conferences. It will be decided by whether rules outlast leaders, whether institutions outlast deals, whether people outlast promises. For you, the lesson is broader. Energy is never just energy. Markets are never neutral. And when power says trust us, history urges caution. If you want to understand how this reshaping continues, what it means for global energy, and which country becomes the next test case. Follow this conversation, share it, and I'll see you in the next analysis. Because the most important stories are the ones still unfolding.